Hello, this is Pat Walker at Mission Winners. It's Saturday. Saturday in the park. It was the 4th of July. No, it wasn't. Okay, here we go. Let's move on with it. Actually, it's Saturday, 2/28. How about that, huh? 2/29. 2/29? No, is there 2/29? You know what I'm talking about. Leap years and everything else. So here we go. Here is the IBD 50. One of the things we like to do, and this is a great method that I share with people, is have this list of ETFs. And I'm giving them to you right here. There's no secrets here. It's really important to see where there's strength, where there's weakness, developing strength, developing weakness. Just frame things up. Here's the IBD 50 ETF. This is an ETF. It's a proxy for leading stocks. And you can say, boy, that's a beautiful reversal bar. Yeah, and that's one ugly downtrend, isn't it? Maybe, but I want to show you something on this bar. Open, always look at each bar. Open, high, low, close. Look at this bar. Open, high, and then it closed at the lows and fell the next day. Gaps down Friday, falls, and closes near the highs on heavy volume, indicating there could be a potential bounce. The most important word I just said in that sentence was potential. Potential. Normally when this happens, it does lead to a bounce. Not every time, but it's just something to be aware of, okay? Just simple chart reading. Watch and see what happens. There's the IBD 50. But the bigger picture is this. This proxy of leading stocks is below the 200-day moving average line and fell on really heavy volume. That's a negative. Remember that. This is not a good market. Here's gold. Gold fell hard. Look at that gap down. That's wicked ugly. The gold miners. Gold. Now look at this. Gold miners below the 200-day, gold above the 50-day. Gold is stronger than the gold miners. The small cap gold, junior gold, below the 200-day. Ugly. Biotechnology, drop down, gap down to the 200-day, right there. See the open? Gap down and bounces off of it on heavy volume. That's a good sign. That's a good sign. Now, it's not a bounce off the 50-day, it's a bounce off the 200-day. So it's not the best, but in relation to these other ETFs we just looked at, this is above the 200-day. That's a plus. Something to remember. Biotechnology, all right? Also have to share this with you. Please be careful with individual biotechnology stocks. There are rockets going up, and let me tell you, they're flameouts when they drop. So how can you participate? Possibly with the ETF. Technology bounced off the 200-day on good volume. That's good to see. Now, a lot of damage has been done here, folks, all right? Remember this, if you buy this, there is a tremendous amount of overhead supply. All the people that were in it here that didn't sell, all the people that bought it here and didn't sell. They're sitting there going, if this thing goes back up to 239, 240, 241, 241, 243, etc., thank God I'm at break even, I can sell. That's called overhead supply. So be aware of that. Bouncing off the 200-day on good volume. Technology. Small cap. Reverse, but still ugly. Look at that. What does that tell you? Be careful with small cap. Oil services close near, bounces, on decent volume, but this trend is down. I mean, and the 200-day is falling hard. Move on. Software got a bounce below the 200-day on good volume. Perhaps it'll bounce. Is this going to be the start of a great trend? Tough to say, folks. Tough to say. Serious damage here. And you could say, Patrick, but look at this here. This is the same thing. No, it's not. No, it is not. Why do I say that? In this instance, it was fallen, but there was some green in there too. On this, you got nothing but red. Nothing but red. Mid-cap bouncing, but it's below the 200-day. That's tough, folks. All right? The Qs, NASDAQ 100, bounced off the 200-day on heavy volume. That's good to see. That's good to see. A lot of this ties in with our max list stocks. Steel. Folks, it's been forecasting a problem. The trend is down. Leave it alone. SMH bounced off the 200-day. Trend is down, but that's a good bounce off the 200-day. We like that. Semiconductors. All right. Spiders, gap down and reversed on heavy volume. Possibly get a follow-through bounce. Is this the start of a big move? That's tough to say. I don't know. Nobody knows the future. This is what's going to happen next. No, that's a lame game. All we can do is get in line. But through history, looking at chart patterns, you realize this is a tough pattern, all right? I wouldn't stake my life on it. Could it bounce? Yes. Just get in line with what is. Where's it going to go? I don't know. I don't know the future. Nobody does. Get in line with what is. Solar stocks, look at this. Check this out. The spider's below the 200-day. Solar stocks bouncing off the dang 50-day. A rising 50-day. By the way, you know what? This is a leading group. No surprise. Bouncing off the 50-day. Solar stocks, something to remember. Small cap below the 200-day. Tough here, folks. Tough. Oil below a falling 200-day. Bad. Aerospace plummeting, reversing. This is a tough pattern. This is a question you need to ask yourself. Would you see this chart pattern in any book on charts, on investing, saying, this is what you want to look for? No, you wouldn't. Home builders, same situation. You won't see this pattern in any chart book saying, yeah, this is it. This is the pattern you want. Materials, same thing. Same thing. Not saying it's not going to bounce, okay? But this is not a high probability pattern. This reversed up. Look at that. Gap down, you got a green bar. Below the 200-day, waterfall decline. Could it bounce some? Sure. Below the 200-day, serious volume down. Financials, tough down here, folks. Tough. You're not going to see this in any chart book anywhere saying, that's the setup you look for to make good money. That ain't going to flush. Or maybe it will flush, if you know what I mean. Okay, let's move on. Financials, look at that gap down. Look at that. Gap down, gap down, gap down. You know what's happening there? Look at the volume. That ain't mom and dad selling. That's serious. Don't be a hero. Oh, this is the bottom. That's an ego game. A big ego and good investing are not mutually compatible. Look at that. Down, 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 down. Industrials. XLK. Look at this. Gapped off the 200-day. It's been going down, but it bounced off the 200-day on heavy volume. Technology. See how you connect the dots? You connect these dots. Consumer staples. Closed strong, but man, that's some serious selling in there. Could it bounce? Sure. But again, are you going to see this chart pattern in any book saying, this is the setup that you'd like to look for? No. Utilities. Dead meat. Nothing there. Healthcare. Reversing. Hard waterfall. Could it bounce? Sure it could. But play it as a bounce. This is not an investing. None of these charts I'm showing are investing setups. They're trading setups. All right? There are no long base breakouts in here. Consumer discretionary. It's spooky when you got consumer stocks dropping hard. Okay? That's kind of a tough deal. Metals and mining. Tough. Leave it alone. Retail. Falling. Dropped and reversed on Friday, but waterfall selling, all right? Software, reversed, gap down and reversed. So you've got a little technology theme right there, bouncing off the 200-day, possibly. There's the major ETFs, major industry ETFs. I encourage you, take this list, put it in your system. I was talking, this is an 8-minute and 30-second video. If I wasn't talking, all I got to do is go like that. And look at each one. Look at each one, and it'll tell me what to do. Anyway, I hope that helps you. Just an overview of the market action. A lot of damage was done. Just play it close to the vest. Remember this, just because the market's open for business doesn't mean you have to do business. All right? Look for the high probability setups. Okay? You'll do better with that, I promise. And you can say, Pat, what do you mean by a higher probability setup? I'll show you right here. Nice entry right here, and just a trend. Look at that. And by the way, you can say, well, that's right there. Look at this. Look at the chart. In fact, I'll do this. Look at this chart here. What's it doing? It's going up. It's slowly grinding up. That's what you want. Trends pay. This is the 8-period exponential moving average. Look at it walk up the 8-period. This is the 20-day. Look at it walk up the 20-day. It just trends. There you go. Lost the 20-day, comes back. You sell a little bit off. It just trends. Isn't that nice? That's great. That's what you want. We picked this one up right there, okay? It goes. Just let it go. Where's it going to stop? You don't know the future. When we accept the fact we don't know the future, we see the future clearer, all right? Just let it work. Oh, this is the top. This is the top. No, I don't know the top. It'll tell me. Finally, it starts doing this. What do? Then it does this, does that, and then it has all this, and then it loses the 50-day, and what do? We took the rest out right here. Sold some in here, sold some here, sold some along here, and the rest here, and it's done. It's done. Will it bounce back? I don't know the future. All I know is I live in the now. Okay? Makes life easier. When you accept the fact that you don't know the future, you see the future clearer. It sounds like a really cute tongue-in-cheek quote. It's a fact. It's a fact. Anyway, hope you're all doing good. Just want to make a video to help you, especially with the ETFs.